Hello viewers, my name is Ashok Sen Gupta from School of Management Sciences, Lucknow. Today our topic of discussion is balance sheet with adjustment. This topic belongs to a subject financial accounting and analysis KMBN 103. In this topic we will discuss how we can do the adjustment and maintain the balance sheet accordingly with adjustment. In previous lecture we understand that how we maintain the financial accountancy, how we maintain the financial accounts without adjustment. Now today we will discuss how we do the adjustment. So what is adjustment? Adjustment means impact of any transaction in trading or profit and loss account with balance sheet. So we have to maintain that impact, we have to adjust that value in either in trading or manufacturing or profit and loss account with balance sheet. So if we do that in proper way, we find that our balance sheet will match and we will get proper financial statement which help us for the decision making. So first is closing account, closing stock. How we treat the closing stock? So closing stock is generally closing stock is a part of trading account and it is also part of balance sheet. So if closing stock is given in a question and it is given in form of adjustment. In question, if you find that adjustments are first closing stock, like okay, I do here closing stock, first adjustment amount of rupees 22,000 only. So how we can adjust? First we add this 2000 in credit side of trading account, credit side of trading account, from where we get the profit, gross profit, the gross profit. So here we add closing account, because there is a double entry system and there is impact of every transaction in two sides impact, one in either in accounts and second is balance sheet. So same amount also entered in balance sheet, and in balance sheet closing stock is a part of asset. So in balance sheet we add closing stock in asset side, we add closing stock in asset side. Clear? This means when closing stock is adjusted, it is giving impact both in trading account and similar in the asset side of the balance sheet. If we fail to do that, our balance sheet never match, Second adjustment is commonly seen is outstanding expenses or expenses payable or expenses due but not paid. So outstanding expenses means the expenses which are due but we not paid, sometimes like outstanding salary, due but company not paid. In this case, outstanding expenses added in the debit side of trading account or profit and loss account. I repeat, debit side of trading or profit and loss account with the name outstanding expense or outstanding salary, whatever it is. Same amount will be the part of balance sheet in a liability side. Balance sheet is a liability side. Clear? So, because it is liability, why it is liability? Because now it is liability of the company to pay the expenses. It is outstanding, then we have give in the part of that liability side. Advance expenses, some expenses which we already paid, given to in advance, it will form respective expenses paid, it will deduct from respective expenses paid. Means if we pay advance of any expenses of next financial year in this current year, then we need to deduct that expense, we need to deduct that expense from the head of that expense, like advance insurance premium of next financial year. So, we deduct amount of 1000, 10,000, whatever the rupees premium is from the insurance premium column or insurance premium head in profit and loss account, as and deduct it from that and add it in the also balance sheet asset side as prepaid expenses, added it in the balance sheet asset side in a name of prepaid expenses. Income receivable, it is add in income and credit side of the profit and loss account. Income receivable in advance, it will deduct from income received. If we receive any income in advance, somebody give us advance of the for the next year financial year, we have to deduct it from the income, because if we not deduct this one, our income will increase and shows our profit will increase, but this will not show the true figure of the company's performance. And as we said, financial analysis shows the true figure of company performance. So, we need this kind of adjustment, we need this kind of deductions. Goods used for personal use, commonly known as drawings. Goods used for personal notes, commonly used for as a drawings, DRAWING, drawings. Drawings means a person use company's asset, company's product asset for its for its own use. This amount will deduct from the capital, this amount will deduct from the capital and part of the debit side of trading account if it is used the goods, part of the debit side of the capital accounts, trading account, I am sorry. Destroy of goods, if goods destroyed, it will show in credit side of trading account and in profit side debit account. Depreciation, it will go debit side of profit and loss account. Provision for doubtful debts, net value of the provision or doubtful debts transfer to the profit and loss account. Commission to the manager, it will show in the debit side of profit and loss account as outstanding commission to manager. It is charged to amount after charging such commission will be calculated. If it is charged on the amount, then we have to do some kind of mathematical equation that कि मैनेजर को पहले दिया तो पहले हम उसको डिडक्ट करेंगे, उसके बाद उसकी प्रॉफिटेबिलिटी निकालेंगे. तो हम इट विल चार्ज एज अ अमाउंट आफ्टर चेंजिंग सच कमीशन. पहले से कमीशन दे रखा है तो उसको हम पहले इसको एडजस्ट करेंगे, उसके बाद हम प्रॉपर वैल्यू कमीशन इसकी देखेंगे. Okay. To understand this concept, we need to do some numericals and this is a numerical here, and the numerical is actually a list of various transactions, some are part of profit and loss account, some are part of trading account, and some are part of balance sheet, and additional information given below. So, first we categorize. I said earlier, in examination, in your examination, first categorize the list according to the nature of that transaction. So, first C is belongs to balance sheet, capital is belongs to balance sheet, drawing is also part of the balance sheet, plant balance sheet, purchase trading account, sales trading account, wages trading account, cash at bank balance sheet, salary profit and loss account, repairs profit and loss account, opening stock trading account, rent profit and loss account, manufacturing expenses part of trading account, bill payable balance sheet, bad debt profit and loss, carriage inward trading. So, we classified this one. After classification, we do the entries. So, here I did some entries. Opening stock previously given, 16,000. Here we have 16,000 opening stock. Purchase, because it is a trading account, at the end of you can say, you can also do this one. Purchase 20,000, wages 8,000. In the sales part, in the credit part, we see sales 42,000, closing stock 16,000. So, again manufacturing expenses here 1500, carriage inward 1600. So, in previous section or in previous class, I told you that first we find out which side is higher end. This side is higher end, 58,000. So, write down 58,000 both side, then deduct the other side from it. From 58,000 I deduct this and this. Finally, I received a value 10,900. Finally, I received a value 10,900. This value is known as gross profit. This value is known as gross profit. So, we from that from this we able to calculate the gross profit. Okay. Now, so see, the closing stock is not given in this part, closing stock given in information here, and we use it in trading account. We use it in trading account 16,000. Now, come to the next calculation of profit and loss account. Salary 8,000, repair 19,000, rent 4,500. See, rent is given 4,500 here. Okay, rent is given 4,500 here and also here. There is unpaid rent, that means outstanding. So, I told you when there is outstanding we add it in the expenses. So, we add 500 also in rent column, we add it rent column. Now, my total rent is 4,500 plus 500, this is 5,000. Bad debts is given, so bad debts is 5,000 here. Depreciation. So, depreciation you see depreciation amount is given in adjustment column, where 10% on machine and 50% on delivery vehicle. So, 10% of machinery, machine cost is this, machine cost is this, and we add delivery vehicle cost is 26,000. So, now calculate delivery vehicle cost 26,000 and cost of depreciation is 15%. So, calculate the 15%, 260 into 15, $3930, it must be 3930. Similarly, cost of machinery, the cost of machinery, let machine cost is 12,000, machine cost is 12,000 and cost of machinery with depreciated cost of machinery is 10%. So, 10% of 12,000 is 1200. When we add both, oh I am sorry, this is amount is just moved downward, machine cost is here, okay, machine cost is 2,20,000. Okay. So, the cost of machine and 10% is 12,000. So, 12,000. So, this is 12,000 actually, the 0 is must be here. So, 12,000 plus 3930 is 15,930, 15,930. After calculating the depreciation, we need to calculate the other expenses. So, here we find loss, total value of this is 8,000 plus 1900 plus 10 plus 15,930. So, 30 is here, 9, 8, 10, 15, 35. So, total value of debit side is 35830 and total value of credit side is only 10,900. So, 35830 minus 10900. So, amount of loss is 14,930, 14,930. Okay. So, this is the loss. So, this is loss and we transfer this loss to balance sheet. Now, come to the part of balance sheet. Okay. So, balance sheet having the asset side and liability side. So, we have a capital of 1,90,000, we know that we from that sheet 1,90,000. Drawing we already know 7,000, we deduct from that. Loss we deduct from capital. Bill payable given in the liability side balance sheet. Sundry creditor part of the liability side balance sheet, and here we see that this one, this is the adjustment. This is the adjustment part. We add it in the we add it in the expense column of profit and loss account, and we also include it in the liability side. Similarly, in the part of depreciation, we talk about the depreciation. When we talk about depreciation, so depreciation amount is this, and this amount, both amounts are already included in the profit and loss account. We already also deduct it from the gross blocks, like from machine we decrease this amount, from this amount. Current closing stock we include in trading account, and here we also include it here, because we are doing the adjustments. Sundry debtors already given in there and cash. So, this the way we match the total, this is the way we match the total. The second illustration also shows the same kind of thing. Capital already given, it is a trial balance, capital already given, drawings already given, and these are the adjustment, The stock, closing stock is 6,400, wages 24. So, all items are here need to be adjusted according to that rule. So, I quickly give you the sheet of answer, like here opening stock already given, that one, purchase less purchase onward, we received gross profit, closing stock is a part of adjustment, so it must be here. Okay. Then we transfer that profit to the profit and loss account. We transfer that gross profit to profit and loss account. These are the adjustment, prepaid expenses, all adjustment are here. The balancing figure is net profit is given 32,000. So, we make it clear that all adjustment must be part of trading or profit loss and balance sheet, trading or profit and loss and balance sheet. So, here prepaid is 2 month, prepaid of total amount paid 36,100, and which includes 2 month prepaid, that so we have to deduct 600 rupees from the prepaid expenses as a prepaid expenses from the insurance. Come to the balance sheet side, look, all the depreciation amount are shows here also, which are deducted from the profit and loss account. Net profit is adjusted here in capital, outstanding salary adjusted here, outstanding wages adjusted in liability side, credit liability side, closing stock is shows in this side, and prepaid insurance. So, all expenses assets are adjusted accordingly. So, make it clear. So, make it clear when you are doing the adjustment, all prepaids are deducted from in profit and loss account from its debit side. See, here prepaid account amount is deduct from profit and loss account debit side, and it must be part of asset. It must be part of asset. On the other hand, when we talk about outstanding, they must be add in the they must add in the debit side of profit and loss account, like outstanding of 1 month rent, outstanding of bank loan, all part of expenses, and we need to pay. So, we add in the profit and loss account, and parallelly we include them in liability side of the balance sheet, include in the liability side. So, these are the rules. There are various type of adjustment which have to be need to understand, and how they are adjusted, and how, because without proper adjustment your balance sheet never be completed. So, vertical analysis of the assets or analysis of the amount are the part of program where we compare the, this is a vertical, these are the vertical, we compare the revenue sale of 2 years, 2 or 3 years. Okay. So, this is about the vertical part of the. So, my dear friends, in today's session we understand that how we adjust the balance sheet, profit and loss account, and how we maintain the adjust in various accounts. These are the some references. Hope you understand this video. Thank you for watching this video. Thank you.